we're diving into Alphabet Inc.'s Q1 2025 Form 10Q. So think Google's parent company.
Right. This is the official filing with the SEC, packed with financial details.
And our mission here is pretty specific. We're looking at the data and trends that could really impact Alphabet's share price. What matters if you're an investor watching this company?
Precisely. We've sifted through it to highlight what's moving the needle, trying to give you clarity on their value and, well, their potential based on these latest numbers.
Okay, let's get into it, starting with the big picture, their overall financial performance in Q1.
First thing you notice is revenue growth. Pretty solid.
Yeah, it looks like 12% year over year. So revenue hit $90.2 billion, up from $80.5 billion last year.
That's the reported number. But, currencies fluctuate. The U.S. dollar got stronger against things like the euro, the yen.
Ah, right. So that impacts the numbers when they convert foreign earnings back to dollars.
Exactly. And if you look at it on a constant currency basis, sort of taking that effect out, the growth was actually stronger, 14%.
So 14% underlying growth. That's important context for an investor, right?
Yeah.
Shows the core business momentum might be even better than the headline 12% suggests.
Definitely. It separates the business performance from, external currency wins.
And it wasn't just revenue showing strength.
Yeah.
Net income. Wow, that took a big leap.
Huge leap, up 46%. Came in at $34.540 billion for the quarter.
Compared to what, about $23.7 billion last year?
Yeah, $23.662 billion, precisely. So a really substantial jump in profitability.
And that flows right through to earnings per share, or EPS, which investors watch closely.
Absolutely. Diluted EPS was up 49%, $2.81 this quarter versus $1.89 in Q1 last year. Strong signal on financial health there.
Okay, so strong top line, even stronger bottom line. Let's break down where that revenue actually came from. Google Services is the giant piece, right?
Still the giant, yeah. It grew 10% overall, hitting $77.264 billion.
And inside that, Google advertising is the engine.
Still the main engine. Grew 8% to nearly $67 billion. So $66.885 billion.
And within advertising, let's see, Google Search and other, that includes things like Gmail, Maps.
Right. That part increased by $4.5 billion.
What drove that? Just more searches?
It's a mix. More search activity, yeah, but also advertisers spending more and Google making tweaks to ad formats, making them work better.
Okay. Did they give specifics, like on clicks?
They did. Paid clicks were up 2%. And maybe more importantly, the cost per click, what advertisers pay, that was up 7%.
Ah, so they're getting paid more for each click on average. It's good for margins.
Exactly. Shows the value they're delivering, or at least perceived value.
What about YouTube ads? That's another big chunk.
Also up. Added about $837 million, and the growth came from both types: direct response ads, trying to get you to click now, and brand advertising, just building awareness.
So broad strength there.
Yeah.
But Google Network, that actually dipped a bit.
Yeah, slightly down, about $157 million decrease. Part of that was currency again.
Okay.
But also lower revenues from Ad Manager and AdMob, though AdSense grew a bit. Interestingly, the number of impressions on the network went down 5%, but the cost per impression went up 4%.
Fewer ads shown, but maybe higher quality or better targeted ones.
Could be, or just different pricing dynamics. Hard to say definitively from just this.
Okay, moving past advertising within Google services. There's subscriptions, platforms, devices.
Right. That segment grew by $1.6 billion. And the main driver there was subscriptions. Think YouTube Premium, YouTube TV, and also Google One Cloud Storage.
So building up those recurring revenue streams.
Seems like it's working well. Okay, so that covers Google services mostly.
When everyone's watching for future growth, Google Cloud.
And it delivered. Really strong quarter for cloud, up 28%.
28%, wow. To what level?
$12.260 billion in revenue. And the report specifically calls out Google Cloud Platform, their infrastructure services, as the main driver.
That's huge. A key battleground, obviously. Strong signal there.
Definitely. Signals they're competing effectively, and it's becoming a really significant business.
What about the other bets, the more experimental stuff?
That was actually down slightly. Revenue of $450 million versus almost $500 million last year.
Less critical for the current share price, maybe, but where future Googles might come from.
Potentially, yeah.
Right.
Things like Waymo, barely. Investors keep an eye on it, but it doesn't move the needle like services or cloud right now.
Got it. And one last bit on revenue. Hedging.
Yeah, they had hedging gains, $260 million this quarter, compared to just $72 million last year. Helps offset some of those currency headwinds we talked about earlier.
Okay, so revenue looks pretty healthy overall, especially cloud. Let's flip to the cost side. Cost of revenues increased.
It did, up 8% to about $36.4 billion. Two main parts to that.
Which are?
Traffic acquisition cost today, that's what they pay partners and others for traffic. That was $13.7 billion. And then other cost of revenues was $22.6 billion. That's stuff like running data centers, buying content for YouTube, things like that.
And the TAC rate as a percentage of ad revenue. Investors watch that one.
Right. The overall rate actually dipped slightly, from 21% down to 20.6%.
Why was that?
Mostly a shift in the mix of revenues. Google search grew faster than the network segment, and network generally has higher TAC. Although, interestingly, TAC within search actually went up a bit because of more mobile searches, where TAC tends to be higher.
Complex dynamics there. And the other costs, what drove the increase there?
Primarily three things. Paying more for content, especially for YouTube, higher depreciation costs as they build out more servers and data centers, and just the operational costs of running all that infrastructure.
Makes sense. Constant investment needed. Now, operating expenses, R&D, sales and marketing, admin.
Those were up too overall, 9% increase to $23.3 billion.
Where did the increase come from?
R&D saw a big jump, $1.7 billion more. Mostly higher pay for engineers and researchers, plus depreciation on equipment. Shows they're still investing heavily in innovation, which investors usually like to see.
What about sales and marketing?
That actually went down slightly.
Right.
The report says mainly due to lower employee compensation costs there.
Maybe getting more efficient. Or just a shift in spending.
Could be either. Worth watching.
And general and administrative, G&A.
That increased, primarily due to legal costs and other corporate stuff. Not ideal, but something to monitor.
Okay, so we've got revenue, we've got costs. Let's get to the bottom line impact. Profitability metrics, operating income.
Looking good there. Up 20% to $30.6 billion. And maybe even more telling, the operating margin improved.
How much?
Went from 32% last year to 34% this quarter. So they're keeping a larger slice of each revenue dollar as operating profit, better efficiency.
That's a strong sign. How did the segments contribute to that operating profit?
Google services, as you'd expect, brought in the bulk, almost $32.7 billion in operating income, up significantly.
And cloud. Is making good money yet?
Yes. This is a key point for investors. Google Cloud's operating income jumped substantially to nearly $2.2 billion. Shows that segment isn't just growing revenue, it's becoming nicely profitable too.
That's a big milestone.
Yep.
Other bets still losing money.
Still investing, yeah. Operating loss there widened a bit to $1.2 billion. That's expected for those kinds of ventures.
And then there was some Alphabet level costs.
Right, things not tied to a specific segment, like some severance costs, office space charges, and also those hedging gains we mentioned earlier weren't allocated out.
Okay, now, there was another big factor boosting the ultimate net income number, right? Other income and expense. OI&E.
Oh, yeah. That line item exploded. Went from about $2.8 billion last year to over $11 billion this quarter. $11.183 billion, to be exact.
What on earth caused that massive jump?
The main thing was a huge unrealized gain, $8 billion on some private company investments they hold. Non-marketable equity securities.
So the value of a private company they invested in went way up on paper.
Exactly. It's a big gain, but it might be a one-off.
Right.
You know, it's not from their core operations selling ads or cloud services. Investors need to be aware of that.
Right. Understand the quality of the earnings. Were there other big items in OI&E?
There were. They also had much larger net gains on their overall portfolio of publicly traded stocks, nearly $9.8 billion this Q1 versus $2.2 billion last year. And gains on debt securities, too, compared to losses last year, plus the usual interest income expense and foreign exchange impacts. But that $8 billion unrealized gain was really the headline item there.
Okay, definitely something to note. Shifting gears now to cash flow and how they're using their money. Capital allocation.
Still generating tons of cash from operations, $36.2 billion in Q1. Very healthy.
And what are they doing with it? Investing.
Lots of investment. Capital expenditures were $17.2 billion. Again, mostly pouring money into technical infrastructure, servers, data centers, fueling that cloud growth and AI development.
Makes sense. And returning cash to shareholders.
Still buying back a lot of stock. $15.3 billion worth in Q1. And importantly, they just authorized another $70 billion for future buybacks in April.
$70 billion. That's a strong signal from management about their view on the stock price.
Usually interpreted that way, yes. Belief that it's a good use of capital, potentially undervalued.
And the really big news on capital return? Dividends.
Yeah, that was a major development. They started paying a quarterly cash dividend, $0.20 per share paid in Q1.
A first for them, wasn't it?
A big shift. And they didn't just start it, they already announced an increase in April, up 5% to 21 cents per share for the next one.
Wow. So initiating and immediately raising the dividend, that's likely very welcome news for a certain type of investor.
Absolutely. Signals confidence and a commitment to returning cash directly, regularly.
Okay, so strong cash flow, significant investment, and ramping up shareholder returns through buybacks and now dividends. What about future outlook stuff mentioned in the 10Q key developments?
The big one highlighted is the pending acquisition of Wiz. That's a cloud security company.
Right, I saw that headline. How much?
$32 billion in cash. Expected to close in 2026 and become part of Google Cloud.
That's a massive strategic bet on bolstering their cloud security offerings. Very significant.
Huge investment. Signals how critical security is in the cloud market.
Anything else on the outlook or risks investors should keep in mind?
Well, the usual caveats about forward-looking statements and risks. Macroeconomic conditions are always a factor for ad spending. But the big ones they flag are regulatory scrutiny and legal challenges.
Still dealing with antitrust cases and things like that.
Yes. Ongoing matters related to search, their ad tech, the Google Play Store, plus dealing with new rules like the Digital Markets Act in Europe, and various privacy investigations, too.
So those legal and regulatory clouds haven't gone away. Definitely a risk factor for investors to track.
For sure. They can create uncertainty and potentially impact the business down the road. Oh, and they also noted employee count grew to about 185,700.
Okay, a lot to digest there. Let's try to summarize the key takeaways for you, the investor, looking at this Q1 report.
I'd say the big positives are really strong revenue growth, especially that acceleration in Google Cloud, improved profitability, seen in both net income and the operating margin expansion, and a clear shift towards returning more capital via hefty buybacks and the new dividend.
Plus, strategic moves like the Wiz acquisition showing continued investment focus.
Right. So factors that might really influence your view going forward, you'll be watching if cloud can keep up that growth and profitability momentum. You'll want to see the core ad business stay resilient.
And that new dividend policy, how that evolves.
Exactly. And on the flip side, keeping a close eye on those regulatory and legal battles is crucial. And remembering that some of this quarter's huge profit jump came from that potentially one-off investment gain.
Okay, lots to weigh. Which brings us to a final thought for you to consider. We've seen robust financials, strategic investments like Wiz, and increased shareholder returns. So the question is, how will Alphabet balance pouring money into future growth AI, cloud, maybe the next other bet, with the growing expectation, now that they pay a dividend, for consistent and maybe increasing shareholder returns, especially while navigating this tricky, evolving regulatory environment?
Yeah, that balancing act between investing for the long term and rewarding shareholders now, all under regulatory scrutiny, that's going to be fascinating to watch.
Definitely something to think about as you evaluate the company. Hopefully this deep dive gave you a valuable shortcut to understanding the key investment angles from Alphabet's Q1 2025 report.